Bitcoin and Ethereum could make a massive move in the next 3 months. What we're seeing right now feels like the calm before the storm. I've been in crypto for almost 10 years, and I've seen this same pattern repeat itself over and over again. Most people don't even realize that interest rate cuts start tomorrow. Your parents don't know. Your friends don't know. But when this happens, Bitcoin, Ethereum, Solana, XRP, Cardano, and other strong altcoins are set to explode. This quarter could be the biggest in crypto history, better than 2021, better than 2017. Experts say Bitcoin and Ethereum act like risk-on assets. Bitcoin is especially sensitive to monetary policy and liquidity. Ethereum is partly the same, but it also has something bigger going for it. AI and Wall Street are moving onto the blockchain. That makes Ethereum feel a lot like Wall Street back in 1971, when the US dollar broke away from gold and a wave of innovation kicked off. That's why many big players are buying Ethereum so aggressively. It's basically a growth protocol. Of course, the news will bring some ups and downs, but every major dip looks like a buying opportunity. Meanwhile, Polkadot just voted to lock its supply, setting a 2.1 billion cap. Solana is seeing huge inflows into its stablecoins, and the charts look bullish. Dogecoin's treasury just bought another 100 million coins, pushing their stash to 600 million. It makes you wonder if Elon Musk might step in again. Big banks like Bank of America are now going all in on stablecoins since the new stablecoin bill passed. And once the broader market clarity bill goes through, those same institutions will likely adopt Bitcoin and Ethereum in a big way too. Firms like Bitwise are already talking with sovereign wealth funds that are buying Bitcoin before the US gets in, just to stay ahead of the curve. Like with gold, investors will likely hold both ETFs and the real asset. The idea of Bitcoin hitting $1 million isn't fantasy, it's math. Think about it. Gold is a $20 trillion market. International payments are worth trillions more. When you divide those markets by the fixed supply of Bitcoin, you get numbers that point toward $1 million by 2029. Right now, only about 160,000 Bitcoin are mined each year, but ETFs are buying up 500,000. That kind of supply and demand gap can only push prices higher. Every pension fund should hold at least some Bitcoin. Having zero allocation basically means you're shorting crypto. Even a 1 to 2% allocation could make a huge difference. Institutions are finally waking up to this, and in the next few years, that small percentage is likely to grow